first question is, which are the sectors of opportunity that the fund is currently having significantly higher exposure?
Thanks, Kunjan, for that question. So our approach is very bottom-up in nature, and therefore we do not look at sectors from a top-down perspective where we take sort of overweight, underweight positions, because at the end of the day, what we're trying to do is analyze individual businesses and see, whether it makes sense to hold on to this business over the long term, and what are the sort of earnings and growth drivers for that particular business. So our sectoral allocation is actually a result or an outcome of this bottom-up approach that we have in our portfolio. Having said that, if you look at our portfolio, we do have a fairly high allocation towards consumer discretionary, where we do see long-term growth drivers. We do have a reasonable allocation towards building materials, selectively high allocation towards information technology, have high allocation towards healthcare, where we believe there are long-term growth drivers for those particular individual businesses, which benefit from various themes, whether it be more on more formalization in the economy, under penetration specifically when we look at the consumer discretionary space, or it could be China plus one, or global supply chain moving to India. If you look at more sectors like manufacturing, etc. So those are the opportunities that we are looking at when we are looking at opportunities in our portfolio.
What are the pockets where the fund would have normally underweight position and why?
So there is no specific sector we completely ignore in our portfolios, but what we do not generally like to invest in are companies which may be undervalued but have significant terminal value risks, or companies which have a questionable track record in terms of governance, companies which may have a sort of a poor track record in terms of capital allocation. We are wary of businesses which are extremely high leverage, or where promoters may have other businesses and may have pledged significant proportion of their holding to fund some of those businesses. So I think these are some of the red flags in companies and businesses that we want to sort of be watchful about. But there are no specific sectors where we will not invest. It may so happen that at a certain valuation, some of the cyclical opportunities would make sense. And as our investment philosophy invests around 20 to 30% of our portfolio in some of these cyclical opportunities, we would continue to look out for some of them. So we do not particularly not invest in certain sectors, but like I said, some of the red flags that we would be watchful for are the areas where we would not want to invest.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.